Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the energy sector penny stocks. Okay, so this is going to be energy sector stocks in this video. And so first up is SDRL. As you can see here, it's making a nice move on the daily chart. It closed yesterday above the middle Bollinger Band and the 50-day simple moving average. It's the dotted purple line and the green line here at 30 cents. And then today there was a gap up open and above the 100-day simple moving average at basically at 33 cents. That's the gold line here. That is the key level to turn into support. As you can see, there's a small space between yesterday's high and today's low. On a pullback, you could see that gap fill and the 50-day simple moving average tested. As long as the 50-day simple moving average in the middle Bollinger Band holds, a new uptrend should begin, or should continue, I should say. It's already starting. We've got the September 19th high close here is or the September 20th closing price here at 475 about is the next key level to break, and then you've got the close here in July, the high close. That'll be the second key level to break, and if we can get through those two levels, the next target will be the 200-day simple moving average at 74 cents. Okay, so keep in mind today's candle did close well above the upper Bollinger Band. You know, if it pulls back into the bands, it would be most bullish if it turned that, held that 100-day simple moving average. As you can see here on the last two attempts, it failed to hold that level and pulled back. So it'll be a bullish change in trend if candles can continue forming above the 100-day simple moving average. Notice there was a big volume spike today and bull crosses on MACD. And there was also a bull cross or a PSAR bull flip, the green dots flip below the candles yesterday. Okay, let's look at NAO. Okay, nice move today, closed up nearly 18%. Yeah, if we look down here at the candles, we can see this chart showing the big gap. There's a gap from back here in February. This is the top of the gap. Down here is the bottom of the gap. And so it's been slowly filling this gap. It hit the 200-day simple moving average. It's this red line here currently at 129. And, it became big resistance. Notice how that acted as a descending resistance line. And so finally today there has been a big break above that level. So there's been a break above the 200-day simple moving average. And then also above this upper Bollinger Band at 150, it closed above that level. And notice that that's lining up with the September high close. So this is a huge resistance level. If it can turn this 150 zone into support, then the next thing will be to continue filling this gap up here, which is now lined up with the 300-day simple moving average at 188. A move up to 190 would fill the gap. So that's the next target. If it can stay above 150, 190 is the next target. Notice, and these annotations were from the last time I made this chart, and yeah, they have not been updated. And the chart was made on this break here after there were tight Bollinger Bands and there was a break above. And so this was the last chart. And notice how there's some similarities on the annotations, like there was a bullish volume spike, and now there's a bullish volume spike today, and the crossover on 80x, and there's a crossover on 80x today. There was a crossover then. Yeah, so just just similarities on the breakout. We're just going to see if it can stay above 150 and head to that 190 level. Take a look at JONE. Yeah, it's still got some room to run here on RSI at 63. It's on a multi-day run. It's been up for 3 days in a row. It closed above the 50 and 100-day simple moving average yesterday after closing above the middle Bollinger Band on Friday. And then today, it busted through the upper Bollinger Band at 158. That's, it needs to now keep working its way higher, riding EMA for support, currently at 149. Now, as long as it stays above this zone here where you've got the middle Bollinger Band and the 1500-day simple moving average, as long as it stays above 140, it should continue pushing higher. The new uptrend that just started should continue. The next target's going to be up here at the 200-day simple moving average at $2, and this closing price here at 195 from the the 28th of September. So that's the next target if this uptrend can continue. Notice that there was recent MACD bull crosses. So the chart's really heating up. It just needs to hold on to that middle Bollinger Band to keep the new uptrend going. Okay, take a look at FPP. This is a thinly traded stock. I was showing it to you here because it's hitting this 200-day simple moving average. As you can see on this chart, it hasn't closed above that level for many months. If it can close above 385, that would be very bullish. The September high close here is the second key level to break at about 405. That's going to be, if it can close above both those levels, you could potentially see a run up to the 300-day simple moving average. It's been in this long consolidation pattern. Notice there's been these volume spikes. It looks like there could be some loading here and a potential push higher. It's all going to be dependent on this 200-day simple moving average. A close above is going to signal more upside potential. If it fails to break, will signal more consolidation. Okay, take a look at DNR. Okay, so this stock has been on a big move. It closed up 8% today, and yeah, it's already been on a long run. It's up 3 days in a row with increasing volume, and there's two gaps in the chart. There's a gap down here near the 100-day simple moving average. Sorry, this is difficult to read a little bit down here, but yeah, if it dropped down to 130, that would fill the gap down here, and then below there's a gap between high of day yesterday and low of day today. So if the candles came down and they tested EMA4 at 148, that would fill the gap below. Notice there's a long upper wick formed on today's candle and a small real candle body. This is a high wave. This is signaling indecision, profit taking, possible dilution. The big thing is the red line here, the 200-day simple moving average at 185. So going forward, candles forming above this red line signal more upside potential, and then we'd be looking for a run up to the 300-day simple moving average at 231. Fail to break the 200-day simple moving average and this May resistance zone will signal consolidation, and then we'll be looking for some gap fills, to set up a potential reload on a bounce play. As long as this middle Bollinger Band holds, this uptrend should continue. It's just always tough with penny stocks when there are gaps, unfilled gaps on the chart, because in penny land the saying is gaps get filled. Okay, so take a look at TOO. It is in the bull zone on RSI and Fasto. It's only up 1% today. This is one of those stocks that's just been setting up for quite a while. It's been consolidating sideways for quite some time. I'm sure everybody's aware of what's going on in Saudi Arabia, and they're cracking down, and Venezuela's got problems, and so there's a lot of reasons why oil could head higher, and so now it's above 57. Now they're talking about potentially above 60. This is all good for the energy sector stocks, and so we'll see if they can break out. Keep an eye on TOO. It's been in this very tight sideways channel, and so if it can bust out above this October 16th closing price, which it closed right at today, if you see it close above that level, that's going to be a major bullish change in trend. That will be the highest close since all the way back here in June, when it made a little breakout and it tried to fill the gap. Notice how the top of this candle in July didn't quite hit that red line right there. This gap, there's a gap back here between low of day on this candle and high of day on this candle. The gap still is not filled. I mean, it's a micro amount to fill the gap, but hey, it's still an unfilled gap technically. And so if it ran up here to just below 320, that would officially fill the gap, and so that is the target. So if it can close above this 270 resistance zone, then we'll be looking for a potential run up to 320. It has to break $3 first, but it could potentially, if it filled the gap, run up here and test that 200-day simple moving average at 354. If it fails to break 270 and turn 270 into support, that will signal more consolidation. Notice the Bollinger Bands are super tight, and it's holding the gold in the green line here, which is the 200 or the 50 and 100-day simple moving averages. So as long as the 250 support zone holds, that is signaling more upside potential. It's just taking forever for this to set up. But yeah, this giant volume spike back in July, that looks like the load. Smart money has plenty of, big money has plenty of time to wait, and yeah. So we'll just see what happens. Okay, let's look at GST. We've got a nice jar filled. Okay, so it was a mini jar. But if you look here, GST pulled back in October. So it started. We'll just go from. We'll give you a little history here of what happened. It broke above the middle Bollinger Band in September, starting a new uptrend, and then it closed above the 50-day simple moving average, the green line. That signaled more upside. And then here it closed above the 100-day simple moving average, which created the recent high close resistance level, which was the closing price on October 2nd. And then it failed to break above that level, and the share price consolidated. It pulled back and it held this 50-day simple moving average. Notice how for 2 weeks it turned that level into support. You know, when candles are forming at the same level for multiple days in a row and that level is holding, notice how all the real candle bodies stayed above the 50-day simple moving average. It never allowed it to close below. Okay, so they you know, that's how the program was set, and you know, it signaled more upside potential. Finally, it closed above EMAs 4 and 8, got moving again, and it filled the jar back to this 90 level. So here we are again. This little mini jar is filled to 90. Now it needs to break above that level. If it gets a close above 90, above this closing price, then that's going to signal more upside potential. You know, this has got that cup and handle look with the neckline to it. So notice it's got the higher lows. If it can, so you've got the low down here, and then you know, with the higher lows going on, and the you've got the ascending support, and you've got horizontal resistance, and then if it can break through the top of horizontal resistance, that should signal that it wants to head higher. Yeah, and look how this looks kind of like a cup right here, and this looks kind of like a handle. And so yeah, there you go. Keep an eye on GST. A break above 90 signals more upside potential. Fail to break 90 signals more consolidation. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.